Greetings, everybody. This is Jeff Scott. I am currently in beautiful Nashville, where I'm at the Country Music Festival. Um, One of the things that for years my wife and I have enjoyed doing together has been going to country concerts. And this is sort of the granddaddy of them all with an amazing lineup if you're into country. Um, don't usually do these webinars when I'm on the road, but since I didn't do one last week because I was at ASCO, the preeminent cancer meeting, which you saw some stocks move from that, I thought I'd do this because of what's going on in the market right now, which is pretty interesting. And what a huge move we had off the Monday lows. I entitled today our V Bottoms, the New Norm. It's June 9th, 2019. My email is shown below. If you like these webinars, I always appreciate hitting subscribed or putting a comment on YouTube or sending me an email just to let me know that somebody is watching. This is for education purposes only. Anything I say is in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. No one pays me to use their software. I pay them to use it. All the tools I demonstrate, I've paid for, and trading involves risk, and you alone are solely responsible. I'm not going to spend much time here. I've done this every week for a decade, but I really have learned from some smart people. Ian Woodward in the upper left-hand corner, Ron Brown, his partner, George Lee in the lower left, John Person and Cigar and the Superior Profit in the lower right. I've synergized those things to work for me. I call it Be Your Own Guru. And when I do my not so common educational programs once or twice a year, that's what I try and teach you. Be your own guru. I own a lot of software tools. I need TradeStation and Thinkorswim. I've built a lot of and had built a lot of indicators for me there. HGSI for the analytics, EdgeRater, and then the rest just supplement. The website for HGSI is as written here. I'm not going to spend much time just looking at PowerPoints except when they depict current market. But if you hit on free 30-day trial, they don't even ask for a credit card. In this day and age, that's crazy. And then investing strategies, you'll see zillions of videos. Well, how many times have I said it? Whenever it looks like we're rolling over, something happens and we take another leg up. So I don't think this is like we are in this green circle where we're starting off from a low-risk scenario and going to the moon. I think the market's high risk. It's clearly news-driven. But right now I'm bullish and I'm in the market pretty heavy, although as like many of you, I'm nimble and I'm ready to change on a moment's notice. We'll talk about some of my favorite trades and how I trade them. But as you can see, based upon where the market is, my behavior and how I trade the market changes. And I don't think the same trades work regardless of market cycle. Sea of green. What's not green? Well, of course, utilities, which are defensive, were pretty much losers on Friday, while most of the market was strong. Where's some of the real strength? Look at healthcare, a rare red in healthcare. Discretionary was strong, so was technology. Financials mixed, energy mixed, and you might expect consumer staples to be mixed, but they look okay as well because they're another defensive story. Major markets tell a story. I'm not even going to break into the bigger charts because I think this is pretty clear with this resolution. By the way, I'm not using 1920 by 1080. I think it's like 2700 by 1200 or something. It's on my Sony Surface that I travel with. Microsoft Surface, what am I saying? Notice little green arrows on the E-minis, NASDAQ futures, and the YM, and on the Russell. Those are John Person buy signals that came in on Tuesday on most of the markets, Wednesday on some, Thursday on others. But we're in all four of the major markets are in uptrends. Couple of comments to make. We have this 50-day moving average coming into play on the E-minis. We'll be interested to see if we can take it out. A little ways to go on the NASDAQ futures. We did break above it on the Dow. We're a long way from it on the Russell. What else would I point out? I would point out that this is a V bottom after a V bottom. And when I show you the weeklies, I think you'll see how precarious that is. The VIX has come down, but interesting, it had an up day on Friday despite a strong market. You can see the sell signal there. And what I think is helping to propel this market as the Fed starts to talk about hikes, not raises, is the weakness in the dollar, which will certainly help stocks, at least in the short term. If I look at the weekly, and this is where I think the market is, it was a great week, and I'll talk about sentiment perhaps later. And I have a lot of things that I'm going to show you that make me more bullish than skittish here. But this is one that makes me skittish. This is a one-bar reversal that I'm seeing on all the major indicators, indexes. All it takes is an equal and opposite bar this week, and we'll all be depressed instead of all be excited. So, yeah, I'm very excited, but it's one major bar. That's a 5% bar. That's a big bar on the major indexes. And hopefully it means that the market's going higher if you're bullish, but I don't think it's a guarantee. Now, what happened underneath the indexes? You could see here in white that on both the 10-year and 30-year Treasury yields, the rates fell as a cut is anticipated. Who are falling rates good for? They're good for dividend payers like REITs, MLPs. Utilities are both a dividend payer and a money borrower. And then home builders. It's bad for banks, and clearly we saw some weakness, especially the money center banks. Now, this I thought was interesting. It's hard to see here, and I apologize, but both on the small caps and the large caps, the white line, which is the AD line, turned positive. It is clearly stronger on the large caps, where it's actually approaching, if not setting, a new all-time high. So AD line rising in the setting of this recovery and setting an all-time high on the big caps, that has to be more bullish than skittish as for where this market is going. If we look here, you can see that bonds moderated a little bit this week with the falling rates as the dollar weakened. These falling rates have been propelling the bonds higher. You can notice here in white is the AD line on the NYSE is not yet at all-time highs, but it clearly turned up. And I would say that transports and small stocks are lagging the Qs, diamonds, and the spiders here. So the large caps perhaps driving this bounce. Now, breadth had staged a big reversal this week, a big move up on the stocks above the 200 and above the 40. But perhaps most remarkable is the move from oversold here on the 12-week new high, new low ratio up to not yet overbought, but probably the biggest one-week move I've seen in a long time. Now, I sort of got excited by the market. Of course, I didn't do a webinar last weekend because I was at ASCO, because on Friday the 31st, we tagged the site of guaranteed return line, as I like to consider it. That is getting down to historic, happens once a year, maybe twice a year at the most. When we tag this almost 0% new highs versus new lows over the last 12 weeks. And whenever I see this happen, and I look at it intraday as well as on weekly bars, but this is very often a signal of a reversal. So we'll see how far this reversal goes. I should have done a webinar Friday, but didn't have time. The McClellan, the oscillator on the daily and weekly have reversed above the midline, and the summation index has turned up a little bit with this move. Now, let me give you a little basics about this. And there's probably many different ways of what's the word I would use, interpreting the Commitment of Traders report. This is how I learned it from John Person, and the JPCOT. He takes what's on his website, which is the commercials. These are people that might be hedging. So if I was looking at corn and there was concern about a drought and concern that you'd have a bad corn crop, then they might be buying calls on corn, so they'd have a just like or buying puts rather to protect themselves. So these I don't usually pay attention to. What I live with are these yellow and the blue. The yellow are us. It's the individual investor. And the blue are the professional investors, the hedge funds, the people who talk on TV. And what I want to know is, why are they all talking down this rally on CNBC when this data is through Tuesday, before the market even bounced. And the blue, the professionals, they were short when the market fell. All right, they dropped down near the bottom. But then they started buying. Well, those of us who are individuals started selling. And over the last 5 weeks, the professionals are still buying. So if they were still buying on Tuesday, they're probably still buying next week when we see it. So to me, this is another signal that perhaps this market has got some room to run. The buckets. Here we were a week ago when I didn't do a webinar. 86% of the stocks were below the midline in the S&P 1500 on their Bollinger Bands. Now we're 50-50. We got 13% of the stocks above the Bollinger Bands. We had close to 20 below. This was approaching a sell signal last weekend. We did have the bounces we would have expected. We had a Hindenburg, interestingly, on the NASDAQ on Wednesday. But it was also when we started picking up the new highs in green there. As the week went by on the NASDAQ, the Hindenburg dropped off. And what's happened on the NYSE, which is more classically used for the Hindenburg, we had a couple of signals in late May, and those have been replaced as new lows have dropped off and new highs have increased. So I call it a Hindi free zone, so no signal there. Notice that we had a string of kahunas on Tuesday. That was not enough to flip the market. We're going to look at the Woody indicator, percent B times bandwidth. But as the week moved on, and by Friday, except for the Russell, which is lagging, all the indexes are green, which is in a buy signal. As well as the sector strength, except for, interestingly, communications, also has turned green. So the markets have clearly turned stronger over the past week. Now, I like to use Q during the day. So Q, in some ways, you're scratching your head going, isn't that a competitor to what HGSI does? Q does some things really well. It doesn't have integrated data. Most of you are probably not going to buy Reuters real-time data to do this. It doesn't link to the charts as well as HGSI does. And by the time you pay for Q and Reuters, you're at about $2,000 a year if you want real-time. Probably $1,200-1,400 a year for end of day versus $599 for HGSI, so I don't really think there's competition there. But I have this on one of my monitors real time during the day. I get an idea of sector performance. Now, interestingly, what difference a week makes. In brown is 10-day performance, and over the last 2 weeks, all the major markets have been positive. In magenta, would show the last day, Friday, and you could see strength throughout. Financials, as I pointed out, was not real strong, and utilities were negative, but 9 out of 11 groups were positive. If we look at sectors and what's going on here, I've highlighted here the 5 days, and over the last 5 days, materials and industrials had been leading. What's interesting, I like looking at a 2-day window, and what comes up to the top on 2 days interestingly, was energy and real estate. But the one I'm focusing on this week is information technology. Why? Because it's been a big mover up. It was a strong group, stubbed its toes, and has now moved back up. These are still low on a relative strength basis, although they had big move on Thursday and Friday, so we'll watch and see what happens to them. And consumer discretionary had a huge move on Friday, but here's a group that's been in the proverbial toilet. So I'm going to not move on that. But let's look at information technology. Now, one of the strengths of this program is if I clicked on it, it would bring up this map. And the same thing, 2-day movement. And what's moved the most over 2 days, and it seems to be moving back up, is application software. So I clicked on that, brought up a list. And if I look from a fundamental perspective, we might want to look at JCOM, LogMeIn, and some of these others here that have blue. But I'll spend more time here and say, look at the strength of this market over the last, 5 days and 1 day, not 10 days. 5 days, 11 nothing. Last week was a negative week, a week ago, not this past week. So over 5 days up 11 nothing, very strong over 1 day. Canaries in the coal mine, I should probably put this thing to bed because stocks like Tesla have had their day. Google's getting killed. Some of the others are showing some strength, and notice how we moved right into this red line. I call that the first line of the resistance. That's my chandelier stop if I was short. And we broke through up here at 91. We traded down to 78.5, and now we're up against it. So that if it breaks above that, maybe we get a further run of some of these canaries. Now, what I think is kind of interesting is I put this list together in March, early March, and the reason why I put together a list of leaders is I look for it to roll over. When it rolls over, usually the market's done. Despite what we went through in March and in June, May, June, this thing has never rolled over. At best, it's gone sideways. And this is a closing high on Friday. So maybe we're another put a star here as sign of a market that has more strength than we're giving credit to. Know your news and earnings. There's some important news this week. PPI, CPI, always have the energy numbers, jobless claims on Thursday. And but notice what's missing. There's no Fed meeting this week that I could see. And there's also no Fed speak. There's just some Fed business inflation, which I'm not sure anybody will care about because there's not been inflation. And maybe a little inflation would actually be good. So medium, Newsweek perhaps, maybe less than medium. Also not much on earnings. Of course, if you own one of these stocks, like HD Supply, HR Block, it's a big week of earnings. But for most of us, unless we own these, it's not a very busy earnings week. Market thoughts. Markets moved up over 5% this week, if they touched, and I'll show you on the S&P, their prior March 2019 lows, ran back into their 50-day SMA, reversal triggered, and fed, no pun intended by news, weakening employment numbers, Fed becoming supportive of the market. China talks are back on. Mnuchin, although over the weekend did say more tariffs might be on the way if they're not good talks. If it wasn't fake news, there was a Mexico settlement and an indefinite suspension of tariffs. This occurred after market close on Friday, which would drive markets higher this week since it drove them lower when it was announced. And it's amazing how much sentiment has improved in the past week. Yet the chart suggests, as I showed you, it's a 4-day V bottom could be reversed with a single tweet or a Fed misstep. Yet, as I showed you on the commitment trader reports, why have professional traders been buying while the talking heads were talking Armageddon? That's why it's so much fun. So a little bit about my favorite trade and how I trade them, because these reversal days and the next days that follow are like manna from heaven for me, because I find all my setups so easily. I want to market in an uptrend and a reversal with a recent reversal as an accelerant. So I'm not the market, I'm thinking of the stock there more than the market. So let me change that because it's confusing. So I'm looking for a stock that had or has been in an uptrend, and perhaps it's pulled back. A recent reversal in the market is an accelerant. I look for a eureka on the market. That's the HGSI bullish confirmation. Similar perhaps, but calculated differently than an IBD follow-through day. Actually, I was right in the beginning. I am looking for a market that has been in an uptrend or is in a short-term uptrend with a recent reversal as an accelerant. My bad. Sorry about that confusion. Sometimes I do these in my sleep. A eureka on the market. The stock was in an uptrend and pulled back into support, which for me, a major moving average is what I like to see. Buy when it breaks out with momentum, and I usually set my buy at the high of the prior day. Trades, I might buy the stock. I might buy the call. I might buy a synthetic stock. Now, buying a stock is expensive. Your risk can go to zero, but it's usually you can control the risk with stops. You can use stops on all these, but the risk is different. When you buy a call, you have the upside of a stock. Your only cost is the premium. Your only risk is the premium. But you got to worry about a strike price and a duration, and you got to trade above the strike price, the amount of your premium to break even. A synthetic stock, you get paid or you pay a few pennies. You buy a call at the money, sell a put at the money. It behaves 100% like stock. It's got a huge impact on your margin account because the broker treats this as if the put can almost go to infinity. I like this because it's little money in. The volatility sort of crosses each other out on the cost of the premium, but it's a trade that's not for everybody. So I created the Scott Synthetic. I just added a put to a long put, so this caps my losses. I might sell puts at this time. It's easy money, but you're limited to the premium that you collect. Or I may sell put spreads, which reduces my risk, but again, reduces my premium. So these are the trades some of the trades that I took this week and why I get excited by reversals in the market. So this is a insurance company, Cincinnati Financial, CINF. So what I liked about this stock was I had a couple of bites at this apple. Uptrend, sideways. You can't see it there, but there's actually a green arrow, which is here. This is a proprietary indicator that I've built into HGSI that will become available as an add-on probably this summer. And why I like this trade at this time is in a squeeze, which is the yellow. The weekly bongo, which sometimes is going to be slow, so I don't always care, was green, which tells me it's been a long-term uptrend. The blue here is a series of pocket pivots and a kahuna. That is the setup I like. The only thing that's missing there is on the next day I had a mobile breakup from the squeeze as well. So I would have set my buy at the high of the day. I would have gotten triggered the next day and I'm still long. Well, that's the setup I'm looking for. And then I trail a stop here, and that might just be the chandelier that you see here. Here's Tractor Supply on Tuesday. I have a mobile breakout from a squeeze. Yes, it's in a downtrend, so the weekly bond goes red. Stock's in an uptrend. It's pulled back into the 50. This is my signal. Mobile breakout from a squeeze, move up off the moving averages. I've got a Eureka on the market on Tuesday, which says the market has confirmed that it's going up, and I had a kahuna. So this is sort of my buy signal. I set my buy stop above the high of the day. I filled, and I've been riding that up, and I will trail my stop up, as you can see the chandelier. Now, the other thing that happened is, notice it says weekly bullish doji reversal. This isn't a perfect interpretation of John Person's high close doji because I can't really get some of the features of that into this program. However, what that tells me is the weekly bar, which this bar is part of, had a high close doji, and you can look back 3 bars. There's your doji. Once I traded above the high of that bar, I triggered that high close doji signal. That's another confirmation for me. How about MSCI? Uptrend, sideways move into my 50. Why do I put a buy order on this one? Because here I have a mobile breakout from a squeeze, my buy signal turned positive, the Eureka on the market, and kahunas. You set your buy price, trades above the high of the day, and voila, the stock took off, and you could have bought it before it ran away too much. So, and again, another high close doji this week. Something about that high close doji and why I like it. To get a high close doji, within the last 3 weeks, you had to have a doji. Here's a doji here and a doji there. Now think about what happened during that week. It meant the stock started on Monday and closed on Friday, very similar. So you got a stock that's going sideways. I like a base. So here's my sideways move that gave me that doji. I traded above the high of the doji, which is a very bullish signal, which triggered the high close doji. And once I traded on the daily above its prior high here after my signals, it gave a good buy point. So this was a good week for me because my type of trade was working. At my live meeting, I can show you how you can use HGSI and your other tools to find those like a laser. Now let's take a look at the market and see if we got any potential buys for this week. Special thanks to my wife because she's sitting here letting me do this on our vacation. She's a gem. If I go into TradeStation very quickly and I look at the markets, I only have to look at one because they're all the same. Let's look at the E-minis. Now, this is another thing that's running on my machine. So what do I see here? I see a buy signal came into the market, according to John Person, on Tuesday. We've had a huge run up to the outer envelope. That is somewhat concerning, except you could see here the market likes to run up that outer envelope. So wouldn't that be wonderful if we had a run that looked like that? Doesn't run up with this straightness the whole time because it gets oversold very quick. We haven't triggered a buy signal, but we're probably close on the weekly. The monthly, we're in a buy signal. I come down here, I see my high jump is at 85%. I know that that's not too high. And my weekly bond goes red, which means we're still, from a weekly perspective, in a downtrend. So we still got a little bit of work to do here. God forbid a triple top is all I could say, because you sell double tops, you got to be selling even triple tops even more. And we had clearly had a double top here. So that's something that I'm looking for as being a concern. But right now, it's hard to be too upset with this market. Again, I can look at the NASDAQ. It's exactly the same, not quite to the upper boundary. It's at 73%. If I look at the Dow, I see it's at 81%. Why am I looking at those? Why do I care? Because there's no question that before the market rolls over, the high jump has a tendency to get higher. And so when I see it get into the mid-90s, I know that I have an extended market. And here's one here. You have a shooting star with a high jump of 100. That would be a clear-cut time to get out of the market even before the sell signal came in. The dollar, which I was happy to see weaken over the week, and you could see it had a sell signal 6-7 days ago, so you can only imagine what that would do to some of the metals. Now, the metals were up both because of weak dollars early in the week, but probably also because of defensive play. So you had a big run on gold and silver, and with some of the risk in the market perhaps coming off, we'll see if some of the dollar-driven gains and risk gains may, again, moderate this week. Then I jump into HGSI. This is what I do every night. I'll go into market analysis groups. I'll highlight Major Markets Plus. I'll hit Warehouse View. It should open up to the right. I'm going to go to the top-down view, which is price and volume only. And this ranks my things. And you can see Dow Jones, NASDAQ, mid-caps, NYSE, biotech, small caps. You know you had a good week if you've owned stocks when these things are up at the top. What's underperforming? Utilities, commodities, the dollar, treasuries, gasoline. Things that would you expect to do worse during a strong market. You look at 5-day moves, 6.4% on the semi, 6% on gold. S&P was up 4.4%. It was up about 5.8 from the low on Monday to the high on Friday, then gave back just a little bit of that. The IVD Innovator Fund, the FFTY, which I added to this group, was up 4%. And that group's probably important for us because if we're growth stock investors, that probably most closely represent things that we're buying and selling. So I look at that and I see a very bullish market, at least it ended that way on Friday. So let's take a look underneath and see if we can learn anything. Set my views up. Yes, I know you're thinking, but I don't have those views, Jeff. It's so easy to make your own views. I'm changing my views all the time. And I've added my Jeffrey indicator, which is just another momentum indicator, which hopefully will come out before too long. So I've been talking about a box in the S&P, and we broke below that box, and that would have been concerning because I love looking at some of the Wyckoff things that would have then showed a new box forming here. And aren't we lucky that we didn't get a new box? And we jumped back into the old box and we ran right up to that 50-day moving average. Again, here's your signal there, a signal on Thursday from me, a Eureka, a Kahuna. What a big move in the market. And this was after the prior day had that Hindenburg, at least according to HGSI. So this was a pretty big move. You can see on the weekly, we took out the bottoms and then we sort of had one of these what do people call these? Big bars took out, it's an engulfing bar that took out a number of days, bearish days. Very bullish looking bar, but again, all it takes is one like that. I think our target now has to be a couple of things. One, can we get above the double high? That's really critical for this market. Or do we reverse there? And if we fail at a triple high, I think we're going against a brick wall and the market's going down lower. A breakout obviously would be the opposite. It would be very bullish. So let's wait and see what happens before we count our chickens. Dow Jones Industrial will look similar, almost looks identical. The NASDAQ, not quite as high towards 50, but looks good as well. Big move off the bottom. And then lastly, the Russell 2000, which has been the weak sister and is still below its 200-day moving average, although it did have a big bounce this week as well. Again, in the beginning, I showed you the AD line on large caps is outperforming the small caps. If I look at that 50, the Innovator IBD Fund, again, reflecting what a lot of us do, looks a lot like the market has pulled back into the 50. If I look at the dollar, we know the dollar sold off this week, and you could see it here, dropping below the 50. On the volatility index, not quite down to where it can fall, and actually had a positive day on Friday, which is interesting. Gold and silver should have done well with weakness in the dollar, and you could see gold rallying up here, kind of a spinning top day here. Sort of looks to me like I bet if things keep heading the way they are, gold's probably going to pull back some, but we'll see. Weak dollar will reduce that amount, and silver had a shooting star on Friday, although it gapped up, but closed right where it opened. So markets, if you're bullish, you could be pretty happy with the markets. They look pretty strong, and with that Mexico news, maybe we'll get a pop for the beginning of the week. Just remember, the markets turned on a dime on Monday, and they can certainly flip over and go bearish on a dime as well. If we look at industry groups, and I'm still playing with what I think is the best way of ordering these. But if I look at top down, which is price and volume driven, you can see there's 174 groups. If I look at those that are moving to the upside, there are 73. If I want to now look at these and look at the ones that are also in an uptrend using my new indicator, I drop down to 37. If I want to rank them by raw, these are the ones that I'm most interested in. And so I start every weekend by doing what I just did by looking at the markets. On the weekend, I then look at the top 10 groups. On the weekend, I then look at about 800 other charts. During the week, I just restrict it to this and a couple of my scans. So let's take a look at some of these. Let's look at semiconductor devices. Change index group. So AMD has been one of my favorites, and it's certainly, see if we can see the pattern here, kids. Uptrend, pullback. So this was an opportunity here. But then we had another opportunity set up for us on Tuesday. And with that chandelier stop, you would not have been wrong saying, I'm going to buy this stock if it trades a nickel above the chandelier. And it did, and you would have been long. I like AMD here. I think that was the one that really I liked the most. Intel's, maybe this is a good time to buy it if you're a value investor, but it's sort of been beaten down. NVIDIA, similar story. Broadcom, similar story. Notice they've all had big bounces off bottom, but I like buying stocks that are in uptrends. And so far, I feel good about AMD. This one is close. Worried about that 50. Most of these stocks have been beaten up quite a bit. Now, Marvell was the other one that looked interesting. Fundamentals don't look that great from a growth perspective. Uptrend, pull back to the 50, and here we go. Kahuna, mobile breakout in a squeeze. Kahuna, a Eureka out of a squeeze, so that could have been interesting, although not as perfect looking as some of the others. Next group down. Also, before I go, let me change this to the stock view. I want to point something out. This is one of the things that I added for me is I really like to know about the rest of the group. So I've got my bullish and bearish reversals there. But I could see on this semiconductor group, 92.9% have a buy signal, 7% have a sell, although there weren't many new buys on Friday. So let's go to the next group, which is application software, which is one that I liked on the Q review. And I really love this stock here, but it's so hard to buy it here. So, let's look at that and tell me how this is different than my 3 examples. This is a great opportunity. I missed this one. I'm mad at myself for missing it. I think it had some earnings was the issue. But my God, 17 new buys in this group on Friday versus 4 new sells. Where my arrowhead is, you had a weekly bullish doji reversal because that'll be good for the whole week of 5 bars. You have a MOBO breakout in a squeeze. You've got my indicator firing a pocket pivot. You had 2 kahunas in a row the day after Eureka. You set your buy stop above this and you go to Happy Land. I missed it, but that's the pattern I want. And I did look at this, by the way. I am in Twilio, same pattern here, uptrend sideways. Perhaps we got a breakout in process. Salesforce, probably it's not too late to get in. Again, follow Bible gap up, mobile breakout from a squeeze. All the indicators lining up. This one's starting its run. Again, bullish doji reversal for the week. Workday, it could be getting ready to fire. It's sideways. It's moved up off the 50. I think my favorites were the first couple. Here's one that looks interesting. Zendesk, clearly a sideways. Mobile breakout from a squeeze and the kahuna. My buy signal came in on Wednesday, and this one looks like it's getting ready to run as well. I always look up here for earnings dates. So this is what I do. So it's specialty pharma. Let's see if we can find my pattern. I wish I could tell you about La Jolla. I don't know what happened here. It's not a cancer play, but it's got a daily bullish doji reversal. But let's just go quick, more info from Web. Let's look at FinViz and see what the information on La Jolla Pharma was. It must have been some type of data. Positive results from pre-specified interim analysis of phase 2 study in patients with hereditary hemochromatosis. Folks, trading specialty pharma and biotech can be wonderful. It can be miserable. So if you think about a industrial stock, a gold stock, well, that's tied to the dollar. But you think about a typical stock, 4 times a year you're going to get major news with earnings and revenue. You can't control pre-announcements. Secondaries can hurt you a little bit, but you kind of know when the earnings dates are. When you buy biotech or specialty pharma, if that was negative news, the stock would have dropped the same amount. It gets released when you have no idea. You have meetings throughout the year, like the ASCO meeting, where results are presented. But turns out, if you waited to June, you were too late because in mid-May, the abstracts came out and said what's going to happen. So these are tough to buy because of news. But when they work, you get moves like this with a double in a couple of days. Don't know enough to say I'd buy or not. Certainly, it's a stock that's been beaten up. You can see on the weekly it's come down. It went sideways for a while. This is one that I did not spot, so I don't really think I had a clue before it moved because this was a big move already. Contraver, don't know it. Don't know what's going on there. Am I not? I am. Here's one that broke out. Again, it's hard for me to get excited and buy here. It meets my criteria, but it's not really in much of a trending, choppy looking stock. Here's one I love. Uptrend, sideways. I called it out, I think, a couple weeks ago. It's starting to run here. Guardant Health is a leader in molecular cancer care from a testing perspective. I like the stock. I like the leadership. It also had that high close doji working for it. You can see it went sideways for a number of weeks. I like Guardant Health here. Unfortunately, I personally can't buy it because of NDAs. Tilray is a stock that's been beaten up. Maybe it's the next big run of marijuana starting, but it hasn't started yet, so I'd skip it. Mirati, they had some good news at ASCO, so the big move up. A lot of times they get a big move like this and they go nowhere because the news is done and we wait for the next news event. I don't chase these. Another marijuana stock, veterinary medicine. Here's my pattern. Uptrend, sideways, mobile breakout from a squeeze. My signal fired in a kahuna. You certainly could have gone long after that. I did not. All right, let's look at the next group. Back. Biotech. Similar to specialty pharmacy tied to news. So here's the news. There's a company that, here was an opportunity here. Bible gap up, mobile breakout from a squeeze, pulled back into the 50. My indicator fired in a kahuna. Another opportunity on Friday, and this thing just took off as there was some M&A discussions, but nothing that I could hear that was solid. Probably would not chase it at this point. Here's one that had a Bible gap up on news as well. Somebody extended a licensing agreement. After that news pop, I'm not sure I'd be chasing. Gilead, no. Celgene is already in buyout mode. Regeneron is a big one that's pulled back. This could be a great value play. That's not the kind of investor I am, so I move on. Vertex, not really. I'm looking for my pattern. So here is one, Cure, that had it earlier in the week, but it's already moved up on the way $10 from where it triggered, so I wouldn't be chasing that. Notice that weekly doji signal. The reason why I love John Person's weekly high close doji is because it works. And you'll notice how many of these stocks that I'm pointing out as looking good have that signal. Biogen, nope. Amgen, nope. So I go down the top 10. I'm going to probably go down one or two more and then move on. Apple started to move this week. I don't know I'm in Apple. I bought into Apple again. I don't know. I'm mixed on it. Fundamentally, it's not great. It pays a dividend. It's not priced high. They're going through that transition from a hardware to a software company. How about Ciena? This one popped on earnings. Just notice, did somebody get the earnings earlier? On 2 days before earnings, we had my indicator fired, we had the Eureka in the market, we had a kahuna, and we had a mobile breakout. We also had we didn't have I thought this was a weekly doji, but no doji reversal. Who knew? Somebody knew something. So I looked through looking for my pattern. I did not buy this one, even though it's set up the way I like it, because it's Motorola. And I remember the flip phone. That's the last time I bought anything from them. But obviously, I'm a dinosaur because it took away time for this to work, but the stock had a nice 20-point move since that signal. So I will typically, I'm getting tired, so I know you're getting tired of listening to me, go through the top 10 groups and find the things that I like. And then I can look for the opposite from a bearish perspective if I'm bearish on the market, which I'm not as we sit here. The other thing that I do on the weekend is I build a watch list from a lot of other watch lists, and I call it my consolidated buys. I put a price and volume limitation on it, and then I look today at 800, or this weekend at 826 stocks. These are the ones that came to the top. Many of these we've already looked at because they're in the strongest groups. And then I come up with some type of a buy list. And let's take a look at my buy list today. I like to show you that list. Now, just because it's a buy list does not mean I'm buying them. It means I'm going to stick them into a watch list. And here's what a watch list looks like. Wrong one. Let's try this one. And with that watch list, I am going to be able to look for, I like reviewing this because I think it just shows you the power of a watch list. I can put my stocks in it, the buy stocks, and some stocks I'm looking at potentially shorting. And I could be looking for bounces, breakouts, box signals. These are all Q signals, Q bullish and bearish entries. I can look for green candle lows and red candle highs, squeezes, mobile. I can look for breakouts, or in this case breakdowns, which I shouldn't see any in the buys. I can look for breakouts, which I saw a couple. I can look at pocket pivots, and I'll get these real time during the day, up and down. I can also look for stocks that have a buyable gap up. You can see a couple of the ones that I'm looking have buys on. CRISPR and PRSP had buyable gap ups this week. And then if I have a big enough monitor, which I would at home, I can actually look at John Signal's firing intraday as well. So a lot of cool things that I could do with that watch list, looking for them to trigger. I'll finish with a very quick run through my watch list with some of my thoughts on some of these stocks. We'll go through 45 stocks in 10 minutes, and then we're done with this review. That was a deep sigh by my wife going, when am I going to finish? El Dorado uptrend sideways, broke out on Friday, mobile breakout from a squeeze, pocket pivot and a kahuna, good earnings per share growth. PayPal, market leader, another breakout here. eBay, uptrend sideways. What do we have on Friday? A squeeze, a pocket pivot, and a kahuna. Several parts of the move that I like to see. Etsy, I don't like this as much because it's in a downtrend, but I put it on my watch list because if it can break above that 50 and hold and show some momentum, that's been a stock I made money on in the past. We looked at Salesforce already. GPC is too deep in its pattern for me, but why did I like it? I liked it because it pays a dividend, it makes money, and it's sort of setting up a fry pan bottom, a break above that 200. I might be interested. I saw those pocket pivots. I also saw a weekly high close doji or bullish doji reversal. Xilinx, this was a leader that fell down on hard times. Also a weekly doji reversal, looking like it's setting up to run, but it's got some work to do. ServiceNow, leader, had a good buy opportunity a couple days ago, setting up. We'll see. I'll watch that and see if I get another time to buy it. Amazon, pull back into the 200. I think Amazon's ready to start a big move here into earnings, perhaps. I'm long Amazon, so I'm speaking my book. Illumina, a leader in diagnostic testing equipment for the molecular oncology, personalized medicine, a weekly bullish doji reversal breaking out here. AMD, I already showed you why I liked it. Lululemon, earnings are coming out in a week, uptrend sideways, sitting on the 50. If there was ever a time to buy going into earnings because of this is a time to look at it, but earnings are risky. You have to make your own decision. Synopsys, an application software, uptrend sideways. Here's one of my breakouts right there. It's moved a little bit. Also looks good here. Marvo we looked at. Gardent we looked at. Twilio we looked at. There are a couple of oil services that caught my interest, but it caught my interest because you got a sideways pattern occurring on support. Now I just need some momentum to come in. This one actually has good earnings. It's pumped. The other one that I liked was Schlumberger. Funko, uptrend, sideways move. PSAI reversal, mobile breakup from a squeeze and a kahuna. Is this ready to break out? Hope so, I'm long. Twitter, mobile breakup from a squeeze and a kahuna sitting on the 50. That's a signal that I like to take. CMG, another one with earnings about a month away. Sideways here, perhaps with Mexico good news, the stock breaks out and goes higher. It does make money, but it trades at a high multiple, and you're always at risk of the next person that has the shits after eating there because they all blame it on them. Stryker, here's a medical devices that I liked. A couple of kahunas in a row, mobile breakup from a squeeze, broke above the 50 here, probably has not run too far for me. Also that weekly signal turning green. We already looked at MongoDB, we looked at Zendesk. Perspecta is another information technology, not as clean because it was in a downtrend, V reversal, just broke out here. Here's my signal, Bible gap up, mobile breakout from a squeeze, kahuna, pocket pivot, my buy. I'd have to do the math and decide if it's too far, but I like that. I'd rather buy it on a pullback fundamentally, at least got next quarter makes money, small dividend. Zscaler is another one that I'm in, uptrend sideways, breaking out. Chegg had some good press over the week, sideways move. This one looks to me like it's getting ready to run, and it's got that weekly bullish doji reversal. Hologic, another medical device stock, similar pattern. Alibaba, a bottom fish, but when is this thing done going down? I think it's an interesting company. It's got good fundamentals, but it's been bashed, I think, because of the China boom. Perkin-Elmer, notice the weekly signal here. I'd like to see it break above the 50 with some momentum, so it's more of a setup, not what I'm ready to buy. Similar to Southern Copper. Raytheon, I thought this was a great setup, and I'm all excited. Bounced against this 200 several times, finally breaks above it. Multiple kahunas, my signal's positive. Has a eureka in the market, coming out of a mobile breakout from a squeeze. This would have been my buy of the week, and then what happens? It announces an hour later that they're looking at a merger with General Dynamics, or United Technologies, so all bets are off on that one. Microchip, another one, pulled back hard. I liked it because of the weekly doji reversal, but still has work to do. Again, it's a watch list, not a buy list. We talked about Biohaven. AT&T, I talk about this every week. Why? Because it's in my portfolio. It should be in yours. 6.2% dividend on a potential growth stock. Worst case scenario, it goes sideways forever, which is kind of what it does. First Solar, the solars have been strong. Here we go. Mobile breakout from a squeeze and a kahuna with a eureka in the market. First Solar. Don't know this biotech. Uptrend sideways and a breakout here, potentially. Don't know it. Can't say anything else about it, but I like the chart. We looked at CRISPR already. Infosys, I think this is sort of an Indian outsourcer technology company, sideways. Why did I like this? I liked it because the bullish doji reversal, it broke above the 50. C Limited gave my signals here, broke out on earnings, a flag, and looks like it wants to run again. Just about done. Core Civic, a REIT, breaking out here, pays a 7.6% dividend. Cousins Property, another REIT. You remember these are strong in low interest rate worlds. Uptrend, pullback, breakout. Mobile breakout from a squeeze, good earnings per share growth, 2.8% dividend. Smartsheet, same pattern, uptrend, sideways, breakout here. Here's one I like as well, Outfront Median. Sort of a sideways move and a breakout, 7% dividend, great earnings per share growth. Schlumberger, clearly a bottom fish, but this is a great company. It's just been in the toilet. It's got a double bottom here going back to the December lows. Pays a 5.6% dividend. I'd like to believe that's a low-risk opportunity to own one of the two preeminent oil services stocks. Garmin, a name that's old. It's got the weekly bullish doji reversal, setting up a base here. Look for some momentum before I would chase it. And that's it. That was my buy list. Again, every night I'll do my top-down review, and I'll add to this. I scan them in multiple programs, and I take buys on breakouts. You all have a wonderful week. Enjoy the rest of your Sunday, and I'll be back at you next weekend. And again, thanks to my wife for letting me take time out of our vacation to do this. Bye, everybody.